Right, so you're interested in buy-to-let. The first thing I need to say about this is that when you're buying a property for somebody else to live in, that you're becoming a housing provider by definition. And at Giraffe HQ, we call our buy-to-let landlords housing providers and not landlords on their own, because you've got someone that you're providing a home for. And you need to think like that, and you need to think commercially as well. So buy-to-let is not for the faint-hearted. It's not for people that want to dabble anymore. Those days are gone in my experience. You need to set up commercially, and the first thing you need to consider when becoming a buy-to-let landlord for the first time is, do I need to set up a limited company to purchase this property in, or do I buy the property in my own name? And for that part of the decision-making process, you need to speak to a qualified accountant. So at Giraffe HQ, we are not tax advisors or accountants. We would signpost you to a firm that we work quite closely with who can give you that advice. Or if you've got an accountant already, please do go back to them first and ask them the question, based on my income and tax position, am I best advised setting up a limited company or buying the property in personal names? Once you've established that, it's then quite straightforward from our perspective to begin discussing the mortgage requirements with you. So if it's a limited company route that you're going to go down, we need to pick a lender that will obviously be happy to lend to the limited company. There are several out there, not as many as in the personally owned space, but there's sufficient to have a choice. Some good providers out there, and they will let you borrow up to 80% of the property's value. So if you borrow 80% of the property's value, that obviously requires a 20% deposit. If you put down a 25% deposit and borrow 75% of the property's value, then you will get a better interest rate and you'll probably pay less in fees as well. So 20 to 25% deposit is what you need. Now, when you're buying a property to rent out, the mortgage lender, whether you're buying a limited company or in your personal name, is going to be looking at your personal income situation. So some lenders require a minimum personal income, salaried or net profit if you're self-employed, of £25,000 a year or more. Some lenders don't have that requirement. And our advisor team here will be able to talk you through that. And so your individual circumstances will dictate which lender we go for and on what terms. The other thing that you need to be aware of is that there's a stamp duty surcharge. So stamp duty is not applicable now until you hit £125,000 or more. But for the last couple of years, we've had a surcharge introduced by the former Chancellor, and that is 3%. So in simplistic terms, if you buy a property for investment purposes and that's £100,000, you would now pay a £3,000 stamp duty bill. So when you're working with us to look at the financial viability of the property that you would like to buy, we've got to factor in the stamp duty surcharge, we've got to factor in the legal costs, we've got to consider your accountant's view on your tax position, and we've got to put all these things into the melting pot, and we've got to work out what the right mortgage deal is for you. A lot of our clients want longer term fixed rates, sort of 3, 5, 10 years, etc. And they're okay, they're quite good if you want a budget and if you want to know exactly what your payments are going to be for that duration of time. But bear in mind that if you go for a longer term fixed rate, for example a 5-year fixed instead of a 2, that the 5-year fixed rate is going to be more expensive. So in other words, you're going to pay more money per month, which is going to eat into your profits. Because you have to make a profit on buy-to-let, otherwise it's just not worth doing whatsoever. So when we're looking at buy-to-let, we're looking at tax position, we're looking at personal income. The bank is interested in those things, and they're also interested in the rental valuation of the property in question. So they have a set of calculations, a ratio where they will decide whether or not they can offer you the 75 or 80% mortgage on the buy-to-let purchase, based on your personal circumstances, your credit score, and also the valuation of the property. So they're going to look at the value, i.e. the purchase price, is it worth £100,000 that you're going to pay, and the estimated rental income of say £550 a month, does their valuer agree with that? And if they do, that'll be fine, and those figures on those numbers would work out quite well. But before you incur any costs, any advice fees or survey fees, you really want to work with us here at Giraffe to just make sure that the property that you're looking at is viable. I get people asking me all the time if certain properties will work on a rental basis, and it's quite obvious to me that if you buy a house in North Tyneside where we're based for say £100,000, you could get a rental income of £500 to £600 a month. If you bought a property for £200,000, you're very unlikely to get a rental income of £1,200 a month. So the higher the purchase price, generally speaking, the poorer the rental return in relation to the price that you actually pay. So that's why we have a lot of our clients looking in the 80 to 120,000 bracket. Some go a little bit higher than that for different reasons. They might want to buy in a slightly nicer area or closer to different amenities, and that's obviously fine. But my main point is, and just what I want to finish on, is you need to have a business plan. You need to decide if you're just going to do one purchase or if your direction of travel is to go to 3 to 5 to 10, because that will dictate the advice that we give you. But most of all, you need to remember that you're going to be a housing provider, and you need to think about providing a safe, sustainable home for somebody. And you also need to be aware of all the letting obligations and the laws regarding landlords. Is the property that you're buying in a selective licensing area? Have you got the right insurance? Etc, etc, etc. And at Giraffe, we're really well placed to talk to you about that as well, because we have our in-house lettings team. So I hope that's been useful, and please get in touch if you'd like to know more.